Welcome back. You're with us on Open Exchange and we are coming to you live from the CNBC-TV18 Motilal Oswal studios. Back to talking to Gurmeet, and we're going to be focusing on some individual stocks now. Gurmeet, I want to start first with banks because of the obvious sort of trade that may play out. Banks are anyway oversold, and now that you have this trigger, if it becomes easier for them to mobilize deposits, then I don't know if that starts some sort of short covering move or maybe some real money flowing back in. Your thoughts, and would you look at any PSUs or would you stick to the larger private names?
So yes, I think it could be may not be from a huge long-term impact perspective, but sentiment positive definitely. Also, as you rightly said, banks clearly are oversold. Right from the Adani news now to trouble in US banks, I think that's largely because of the over-ownership. FIs have almost more than 50% ownership is in banks. So I think some of the banks should make a comeback. HDFC, I think the NCLT has approved the merger. And I think that the big overhang goes. I think the rest of the formalities should happen over the next few weeks, perhaps maybe a couple of months. And it will pave the way for inclusion also in the MSCI index. So that could lead to some, near-term positive for the bank. ICICI also, despite one of the best ever Q3s, has been under pressure. Most of the good private sector banks are down 15% plus from the peaks. I think the credit demand is still reasonable. Deposit growth still in double digit. We'll get a boost. Both credit, as Prashant made that point. So I think banks look good. Some of the tier 2 banks like Federal, IDFC, which are actually working on a granular liability base, should be positively impacted.
Okay, another specific name which is there was this some action expected is Sundaram Clayton. You were telling us earlier, Gurmeet, right? Do explain.
So basically, they are demerging, Prashant, their auto business and the holding company business, and trying to. There's a lot of cash on the balance sheet. So for when every equity share you get about 116 preference share. TVS Group is almost 50% in that, and post the preference shares getting listed, then the holding companies get amalgamated. With it, and then there is a demerger of the casting business and the investment company business. So it's more like it's done pretty well. TVS Group is good on governance. Valuations currently even at this price is 13-14 times, pretty reasonable. But more like a special situation. I would not recommend retail investors to really look at it because it's going to be a little slightly long drawn with preference shares being issued, amalgamation, etc. Can be a little overwhelming, but that's something we are tracking. We are tracking as a asset manager.
Just for perspective, Sundaram Clayton market cap is close to around 9,700 odd crores. The cash they have on their books is close to 2,000 crores, and the value of investments that they have in TVS in particular is well over 12,000 odd crores. So case for that valuation discount or holding company discount to narrow. At the same time, they raised a fair amount of money by selling stake in Suprajit Engineering all of last year. So they had about 4% stake.
Unlocking
value.
All right, that's